Good afternoon. My name is Kellen Klein. I'm the Executive Director of Citizens for Community. We are a nonprofit working to foster community connection here in Sisters Country, and we're so grateful that you could join us for part 2 of our spring wildfire series, Wildfire in Sisters Country. Today, we are focusing on the insurance side of the Wildfire Challenge. This event would not be possible without a great partnership that we've done this spring to really turn our typical one-part series into a two-part series. In addition to our standard partnership with the Nugget newspaper, who has been providing some excellent coverage around this topic. In the weekly editions, we have also been partnering with Rotary Club of Sisters and with Sisters Kiwanis to make this event possible. They've been great thought partners. They have been a literal army of volunteers. They've helped with some of the tables in the background. And of course, supported by my board at C4C as well. So if you're a member of C4C or Rotary or Sisters Kiwanis or the Nugget, would you please just stand real quick so we can acknowledge you for all your support? We make up about half the people in the town, so there should be about half the people here. So thank you so much for your support. We're grateful to also be supported by St. Charles Health System and the Ford Family Foundation. They've provided funding to make this ongoing series possible for Citizens for Community. Now, at the beginning of all of our events, we'd like to read these little handy-dandy cards that you can grab one of your own at the entry point, but they are basically the terms of engagement for all of our public gatherings that we have. They are appropriate, however, everywhere from a big forum like this to the Thanksgiving dinner table. So if you would just solemnly swear to commit to upholding these tenets tonight, we would be very grateful. And this is how we ensure that our conversations remain respectful, civil, and thoughtful. So today, we ask that you will pay attention, listen, be inclusive, not gossip, show respect, be agreeable, apologize, give constructive criticism, take responsibility, and there's always a choose your own adventure at the end. And for big events like this, we ask, take a moment to maybe shut off your phone. If you don't know how to silence your phone, hopefully someone next to you can show you. It's a great community building activity to get help with your phone. Okay, insurance. I know everybody's favorite topic. I'm sure you've been chatting about it all day. It's what you talk about at the dinner table at home. It's what you have conversations about with your kids. No, this is actually one of those topics where, oftentimes we just like to put our fingers in our ears and not think about it until the inevitable happens or the worst case scenario happens, and then it's too late. So I just want to acknowledge all of you for being here tonight because you're taking the first step in being proactive on a really important issue. Same with the broader wildfire preparedness challenge. So thank you for being here. We never commit to solving anything in these forums that we have, but I really like the quote. I think it was someone Kettering from General Motors or something, but a problem well stated is a problem half solved. And so by being here, our hope is that we can at least do that first part, which is identifying the problem, understanding the different facets of it, helping to combat mis and disinformation that we might hear about these topics, and that'll get us on a trajectory towards continuing to take action to address important topics facing our town, like wildfire, like insurance. You all have a handout on your chair tonight, or you should. That handout has a QR code at the top as well as a link at the top where you can access recordings of this event after the fact, where you can also access a broader take-home packet with a bunch of additional resources, links, recommended reading, organizations working on these topics in your community, contact information for all the speakers, etc. So please feel free to take that home with you. That is also our sort of quick hits action guide around both wildfire and insurance. So there's a bunch of additional information on that packet that will give you some really easy opportunities to take action to make our entire community safer in the near future. You also have a index card and either a pen or a pencil with you. That is if you'd like to write down a question for the event tonight. We also will have audience Q&A with a roving mic later if you'd like to verbalize your question, but if you feel more comfortable writing it down anonymously, we'll have someone who will bring those up to me during the forum. So feel free to jot those down as we're working our way through the panel discussion. All right, I'd now like to invite our esteemed panelists up to the stage so we can start the introductions and the conversation that we're going to have tonight. We're really lucky to have some real experts in this community, or who at least spend time frequently in this community, who are able to talk about this important issue. So if Stephen and Matt and Tammy and Luke could come up to the stage, and we're going to move our chairs into the middle and get started here. You can applaud them on the way up if you want. The stage is nice and shallow, so just make sure not to trip off the front as we're starting here. There you go. Oh yeah. Sorry, we could have put them on the chairs beforehand, huh? Just get to watch everybody awkwardly navigate that. Okay, great. Well, like I said, I've got four folks up here who are representing different facets of this topic, and I'm going to let them introduce themselves in just a moment. Let's start on the far end and work your way back towards me. So, if you could just share your name, the organization you represent, what you do for that organization, and explain briefly your connection to this issue. And one of the best practices I learned from public speaking is when you're giving a presentation, you need to tell them what you're going to tell them, then tell them what you told them. So if you could start by also giving me the single most important thing that you want folks to leave here taking home. So who you are, I gave you this run of show ahead of time, Tammy. Yeah, so what are you doing with your life? Why are you relevant to this topic? Why did I invite you? And what do you want people to remember? Good.
What am I doing with my life?
Yeah. In a very narrow sense,
First of all, thanks everybody for coming out. My name's Stephen Lord. I'm with Sisters Camp Sherman Fire. I am a firefighter EMT, and then I also split time 50% or more doing wildland fire specialist type stuff. It's called community risk. And so I kind of help manage doing assessments for people's homes. I also field a bunch of phone calls. When I started the job in 2023, some of the first phone calls I received were business owners in Sisters that had lost their insurance and they had no idea what to do. So over the last couple of years, my job has kind of morphed into fielding phone calls and trying to help people with trying to solve that problem. So insert Tammy. Tammy's been a super helpful person I reach out to on quite frequently. And then also Tammy also sends a lot of people to me. So we have a great working relationship. And what do I want to do with my life? I'm planning on retiring in 10 years. But what I'm trying to do for Sisters, Greater Sisters, is try to prevent us from losing insurance for one. Actually, for one, not burning down. Secondly, I really want us to have some options for insurance because they have dwindled down to pretty much one left. 2 weeks ago, there was three, and now we're at one. So we're kind of in a pickle. And one of the first things I thought, and our prior chief, I've gone over my 3 minutes already, but I like to talk or hear myself, apparently.
Yeah, it was a bold choice by me to invite you back, actually. So
Why did you start with him?
He only invited me back because I have a key to the door.
First, if I give you the signal over there, you just shut him off, all right? You just shut him off.
Roger Johnson said, hey, you need to get a bunch of Firewise neighborhoods up and running, and we need to look at trying to make Greater Sisters Country fire adapted. There's a big pinwheel for becoming fire adapted, and it's not something just little old Stephen at the fire station can do. It involves a lot of different people, and it involves pre-fire mitigation, what we're going to do during a fire, and what happens, how do we rebuild afterwards. The problem is after talking with some people at IBHS, they said that's not the route to go with. We need to do something different. So that's what we're going to talk about hopefully today.
Great. Thanks, Stephen. Tammy.
Hello, I'm Tammy Taylor, and I am with Risk Strategies Insurance here in Sisters. I've been writing insurance since about 1993, started in California when we moved back. I basically grew up here and moved back in 96. So I've been doing insurance locally since 96. I started with Don Fullhart with Full Heart Insurance. A lot of you may know the Full Hearts. And then we were purchased by Biznet Insurance. And now we've just recently been purchased by Risk Strategies. So I do property and casualty, so your home and auto. And then I also do business insurance. So I think the one thing that I would like to try to, get through is to try to educate you. I am very resourceful. I do tell it like it is. I don't sugarcoat things. I basically am very honest and truthful in what is going on. And if I can't do it, I probably have somebody that can. So I usually say, just please reach out to me as a resource, because I might, if I can't do it, I might have somebody that I can guide you to that we can get something done. Okay.
Thanks, Tammy. Luke?
My name's Luke Welbourn. I moved here about 6 years ago with my family. I live in the Hayden Homes community, just a stone's throw from here. I work remotely. My profile is going to be really different from the other people on these stages. I work for a large wholesaler, insurance wholesaler. And so basically what that means is I'm never going to come knocking on any of your doors to sell you insurance. That's Tammy's job. Tammy's actually a customer of mine. I will work with insurance agents to place hard to place insurance. So what we're talking about falls pretty squarely into my wheelhouse. I only write commercial insurance. Okay. But I have colleagues that write personal lines. So I can point you in the right direction. But I think the best value I'm going to bring to this conversation is a higher level, just like from, as Kellen put it, kind of a bird's eye perspective. Most of what I write is actually in California, because if you think it's a mess up here, it's a much bigger mess down there, and it has been for a longer period of time. And so I believe that what we're facing here is maybe what they were facing 10 years ago, right? So if you believe in global warming, if you believe in climate change, like Oregon's starting to look more like California, things are moving up the West Coast it's just facts, like science, like things are happening. And fires are becoming a bigger issue up here, as we all know and all experience every summer. And so I think the one thing I'd just like for you to take away tonight is it's more complicated than you think. And there's a lot of factors which I've done my best to kind of organize without getting too granular on you. But we'll try to provide some maybe bigger picture answers for you if that's possible.
Thanks, Luke. Matt?
My name is Matt Ramage. I'm with the Oregon Division of Financial Regulation. That's the state agency that licenses and regulates several financial institutions that you all engage with, that we all engage with. The big one is insurance. Licenses agents and carriers in the state. I used to be an agent myself, not for very long, for about 3 years. Born and raised in Oregon. I have a piece of property, a little tiny cabin over at Black Butte. I understand what it's like to have property in Central Oregon and what it's like to have insurance and what it means to rake pine needles every day when you're at your house, because I have blisters this morning because I did it for a couple hours. I get it. My role in DFR now is not to sell insurance. It's to provide resources to people and hopefully get folks thinking about their insurance coverage before something bad happens. And oftentimes people don't do that. And something happens and they go to make a claim and they don't have coverage for flood, or they don't have enough coverage for their dwelling on their policy declarations. And so they end up with huge gaps. And so we at DFR on the education side want to make sure people know that there are resources for you all to tap into that are free through the state. And that there are still a lot of carriers. I know that in this particular market, it's down to 1 or 2, but there still is a lot of carriers in the state of Oregon that are writing policies. It's over 105 currently. So it's a pretty healthy competitive market in the state. And if we can get a handle on the fire situation, the amount of carriers that are going to be able to write in more high risk areas like this, I think should improve. So there's lots of resources. There's a table back there that I brought some stuff. I'm happy to answer any of your questions when we get to it, but DFR is there to help and to try and keep the insurance industry serving Oregonians as best as possible and to keep it from on the path where California is at right now, because that is an absolute mess.
Hey, we can all celebrate not being California, right?
Hooray.
That's a win for tonight. All right, let's get into it. I've called part one in my run of show here, word on the street. So, Tammy, you are arguably the panelist that's most directly connected to current market conditions in Sisters Country. So let's start with you. Can you tell us a bit more about what local consumers are experiencing when it comes to fire insurance? And feel free to mention both homeowners and businesses. I know it's something Stephen alluded to as well.
Sure.
Feel free to be to name and shame with the insurance companies if you need to.
Okay. I hate to do that, but it is what we are living with right now. In Sisters, what we are dealing with is that we have a major carrier, Farmers Insurance. Not only is the agent leaving the state, also Farmers itself is pretty much, I believe, non-renewing everybody with a 97759 zip code. I know a lot of people that have farmers, they're calling the agent saying, am I going to be non-renewed? And it's basically yes. So I am working with a lot of those customers to find a resolution to try to. Am I there? There we go. And like I said, if I can't do it, I do have markets. It depends on where you live. I actually do have a market that is writing in Tollgate. So I know that has been a big issue with a lot of people. There's a lot of farmers people in Tollgate that I'm getting. The big reason is because Tollgate has fire hydrants. Now, I do understand that not all of them are a hydrant. There are standpipes. Is that what they are? Okay. Okay. So that's not going to count. It actually has to be a fire hydrant. You have to be within 1,000 feet of that fire hydrant. If you are, then I have a carrier. It is Chubb. They've been very good. I can do the whole package. That's where I'm writing. Some of the areas that I have been having some issues with are Sage Meadow off of Indian Ford. Those areas, those are extremely high wildfire rated areas. The one thing I can say is that if you are not being non-renewed, if you have an offer of renewal, I understand if the premium has doubled, maybe tripled. If you can absorb that, please stay there. A lot of you, you're going to have your auto with them. You've got an umbrella with them. You have multiple policies with the same carrier. I stress to you, please stay there. Yes, I would love to write your policy, but that's not what I'm here for. I'm really here to guide you and help you as much as I can. Yes, if it comes down to me writing a policy, then great, I'll do that. But I can stress, please, if you're being offered a renewal, stay there. There's sometimes I get a phone call that they call me, well, yes, I'm being renewed, but it went up $200 a year. And I'm like, and I'm pretty much like, don't call me. So I'm like, take that renewal. So the one thing too I want to get through is please, please, please look at the value of your home. Okay. If you are not around $300 to $400 a square foot for your replacement cost, please call your agent and get that taken care of. Okay. Most policies have a replacement cost endorsement on it, but for that to come into play, your home has to be at the current replacement value. So if you haven't talked to your agent in the last few years, we know what the building costs are in Sisters. It's about $400 a square foot to build a new home. So if you're not around that value, please, 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 because if you have a total loss and you are underinsured, you risk not getting the value on your home. Okay. And that has happened in a lot of the areas that have seen the wildfires go through. That's what they have experienced. Okay. So that's kind of what I'm dealing with. A lot of phone calls from people that are very concerned. They don't know what to do. You know, I have a lot of realtors that call me because they've had deals that have fallen through. So that's pretty much what I am dealing with. You know, State Farm, I'm kind of hearing what State Farm does is that they are writing in this area, but what they will do is if somebody has moved away that was a State Farm client, or if they've sold, then it opens up that one policy. So if you happen to call State Farm on that day that that person exited, then you have a chance of getting a policy. So
Are you saying we should be like bribing the title companies to get first alert there?
So, and I think Stephen told me that yesterday morning. So, you know, that's kind of what is happening in this marketplace. So I just say, please educate yourself, you know, please use myself or your current agent as a resource. We're here to help you.
And Tammy, before I pivot to Stephen here, is that you sound like you were talking mostly about areas outside of city limits. What about within city limits? What are you seeing there?
Pretty much within city limits. I've got quite a few carriers. You know, Safeco's still writing, depends on where. I do have Mutual of Uniclaw. Travelers is pretty much out. Pemco is out. Progressive is out. So I pretty much have about 3 carriers within the city limits. And it all still just depends on defensible space and where it's at. So.
Got it. Thank you. Stephen, anything you want to share about what you're seeing on the ground here in Sisters?
Chief Pryor just moved from White's Canyon. He was renting a home, and he lives down in downtown now, and he got a policy through State Farm, which was last fall, I believe, late fall.
Did they look him up on LinkedIn beforehand or something?
He had a policy with him before. I'm not sure if that helped, but I encourage people to reach out to their insurance agent, and I tell everybody this. You should feel comfortable talking to your insurance agent. Obviously, year over year, making sure that you have enough insurance to cover your losses. These agents make money off your policy. They don't want to lose your business. When farmers pulled out, the agent in town here had to leave because he lost all of his policies. Now they've got a replacement guy who's from Bend that's kind of covering everything that's left here, which apparently is dwindling down. So I think everybody should, obviously, some people are like, no, I don't want to talk to my agent. I think that's a mistake. I really think that you need to have a relationship with your agent. A lot of people think out of sight, out of mind. That's not the case. So make sure you are staying in touch with your insurance agent. Understand how your insurance company handles their claims, whether it's like I have State Farm, and the claims that happen in our state are what make my rates go up. So last year they went up 20%, but there's some people in here over that way at a table that their rates with farmers went up 120%. There's some people up off Indian Ford that over the last 5 years, they're at 420%. Another thing is one of our volunteer captains, Captain Liming, who's been around here for a long time, he lost his farmer's policy. He's like Indian Ford High or some neighborhood up there. And when he went to find another insurance company, he was getting all these kind of crazy quotes, like they'll cover 70% of the replacement value of your home. And it was almost like a la carte. So he's at $11,000 a year for his policy now. Here's the flip side of that.
There was that one over by the athletic club, right? The apartment complex.
Yeah, their
the
insurance,
townhouses.
the townhomes went from $80,000 a year to 280.
I thought it was like from 15 to 80 grand or
Are you
something.
talking
Like it was,
about the Fourth Sister
Yeah,
condo?
Fourth Sister.
yeah.
I've worked on that account. I have a solution, but we just haven't gone there yet. But I think they went, their HOA is now $80,000, and I think it was like 15 or something.
Yeah.
So here's another hard conversation I've had with one homeowner is that when I get the phone call or when Tammy sends somebody my direction on doing a wildland fire home assessment on somebody's house, I ask them, did you receive a letter of non-renewal? They're like, yes. And I said, well, we can't change that. They are getting out of the market. If you're receiving a non-renewal, you are not going to save your insurance through that company. Doesn't matter if we come out or you do a bunch of fields treatment around your house to give yourself defensible space. They are getting out of the business. They have too much risk. They can't afford to pay claims if some kind of fire blew through a neighborhood. So another thing State Farm does is they also kind of have their policies kind of all around, and they don't put all their eggs in one basket in one neighborhood, because if a fire ripped through that neighborhood, they'd have all their losses with every home in that neighborhood. So they kind of place their policies quite far from each other if they're at their maximum risk level that they want to take in a neighborhood. So the hard conversation I had with a homeowner is that we went up to do a home assessment and she needed a lot of work done. She did have a gigantic pool in between two homes. And I said, she has fixed income, husband passed away. And I said, look, this is not a great solution, but if you can't afford to pay $11,000 a year for insurance, you may need to go without a fire policy. You can have the other insurance because they'll certainly write you a policy without fire in it. But you may need to, if that's going to cost you $11,000, it might be money better spent if you looked into having some kind of a fire protection system for your home, using that pool as like your water source and a pump. And if you look at California, a lot of people have had to go to that route where they get a water curtain that sprays over. Much like if you go to Arizona, you see the misters because everything's hot there. This is more like water droplets raining down and stopping embers from coming in and catching your home on fire, as well as the sprinkler heads on the roof. So unfortunately, if we run out of insurance companies, that doesn't work if you have a mortgage, because your mortgage company is probably going to send you a letter and say, you need to pay off this mortgage or you have to move out and we're taking the house on because you don't have a homeowner's policy. So that's happened in La Pine. People have given like 60 days to pay their note off or they're out. So if you own your house, you have a couple different options. But again, we need to get to the point in our town where we're attracting insurance companies, and that's what my job is kind of morphed into. I'm going to be talking about that a little bit. I bounce this stuff off Kellen too. Sorry, Kellen, I know you're itching to.
I'm staring you down with
I know.
angry eyes over here
I'm
right now.
ignoring you. So we're kind of all talking amongst ourselves to try to figure this out before it becomes a disaster for us.
So before we, I'm sure that Luke and Matt have stuff that you could share in that sort of what you're seeing in the horror stories that we're probably all experiencing. I'm sure most of us here have some horror story or potential fear of a horror story that we could share as well. But I think it's important to zoom out a little bit here and understand the broader industry dynamics that are causing this situation to be happening here in Sisters, even if we haven't had a massive fire impact our town yet. Luke, let's start with you. You mentioned already your role allows for more of sort of a bird's eye view, at least up and down the West Coast. So can you explain why those broader industry trends are impacting what we're seeing at a local level? Like, why are our rates going up, and how is that impacted by what's happening in California or Oregon more broadly?
Yeah. Oh boy. So I need to preface this with like a few notes. I think I already said this. I only write commercial insurance, so this isn't going to be necessarily directly applicable to everybody's situation here. But I think you can draw certain parallels between the two, just given the fact that wildfire affects everything, right? I also only write excess and surplus lines insurance. Okay, so just real quickly to give you a little bit of a understanding of the difference between what Tammy writes most of. She writes some policies with me. And what I do primarily or exclusively, I don't write any admitted market insurance. So if you have been insured with State Farm or Travelers or Farmers or Liberty Mutual or Chubb or any of these massive, massive companies, they're all standard lines admitted companies. What does that mean? That means that they all have to file their rates with the government effectively They have to, what does that mean when they file their rates? That means that like, this is how much we're going to charge, and we can't charge more than 20% higher or 20% lower based off of the risk characteristics, okay? So that is all very in stone until they file to change rates, okay? And so that means that those companies are typically much, much more competitive. They have a huge rule of large numbers, so they have tons of policies. And they're playing that game of like, okay, we're gonna spread it out, we're gonna write as much as we can, and we're going to bet that we make more money than we lose, right? Okay, so that's an admitted market. In the world that I live in, I have access to 30 or 40 companies as a wholesaler. And a lot of people, when they think of, I'll say the first thing, like Lloyd's of London, right? So some of these companies are located in London. They're non-admitted, they're non-standard. They don't file rates. If you write a policy with me, then you'll get a notice saying that this policy is not guaranteed by the Guarantee Fund of Oregon, right? Like, which is a fund that's set up by the state to help if a carrier goes default, right? So the benefit of what I can do is I can bring a solution to a lot of different problems. The thing is that the carrier is going to charge as much as they feel they need. There's no regulation. It's kind of the Wild West as it relates to insurance on some level. Like, that's probably the best comparison. There's not a lot of rules that apply to what we do. And so I think when you're hearing some of these quotes, like $11,000 a month, I wrote, I think it was $65,000 for like an 11-unit condo, maybe 11 buildings. I don't know. But the point is that like, it's not coming from me, don't get mad at me, but like the carriers that I work with are gonna charge as much as they can for the exposure, okay? So that just gives you an idea as far as what I do. It's necessary because it helps to insure things that are very, very challenging. I also write casualty stuff, so I write construction risk, and I write habitational property as far as apartment, not owner-occupied dwellings, but apartments and condo associations and all these other things. So it's a big world. And it's becoming a much bigger world across the United States. Just be clear, because we are in the midst of a very challenging situation. So carriers determine, okay, so people come to me, not regularly, but every once in a while I'll talk to somebody and I hesitate to tell them what I do because it's gonna generate some reaction, either positive or negative, and who has a positive reaction to insurance.
When I think of insurance, that's typically just warm fuzzies all over.
All over the place, right? So so I'll occasionally get the response that insurance companies are just greedy and they're trying to make all of this money and at the expense of their policyholders. And my response is yes, 100%. And insurance companies are financial companies, just like financial advisors and hedge funds and all of these other companies. The end goal is to determine how much money you can make, and for your shareholders, your investors. My company has about 4,000 employees. The company that owns my company, Arthur J. Gallagher, is the second largest insurance agency in the world. We have about 53,000 employees globally, right? And so these people at the top of these companies making these decisions are making decisions to try and make money as much as possible. That's the reality of the world we live in, okay? Now you can look at another example of, let's look at the one example that I can think of that is like not a commercial for-profit insurance situation. That's the California Fair Plan, okay? Now, being someone that writes a lot of property in California and gets a up-close view of this, I also kind of keep my ear to the railroad track sort of this organization. They're the largest insurer in California, which is insane.
And that's because they're basically the insurer of last resort. They're like
they're insuring all of the very, very difficult stuff in California, right? California just surpassed Japan as the 4th largest economy in the world, okay? And so when you think about somebody being the largest insurer in California and being the person responsible for the risks that are most difficult, there are articles, there are reports that like, if something really terrible happens, like they don't have enough money in the coffers to pay everybody because it's a public service, more or less.
And I think we had that slide up here earlier. I think it was something like the California Fair Plan has like $8 billion in coverage. Does that sound right? Something enormous like that?
It's huge. Yeah, they're very,
Like an
very
order of
big.
magnitude different from
And so
Oregon.
This week I quoted a small apartment building in California, and I was able to get it through, you know, you got to be creative sometimes, but I was able to get it quoted $16,000, and California Fair Plan came in and quoted it $8,000. So half of what I quoted. Now I did tell the agent that that is fire only. Anything else happens to your home, it will not be covered. So like to want something like that in Oregon, you just have to understand what you're also getting, right? Like you are getting not a perfect solution because of the next situation I'll talk about real quick. I'm going on a little bit, but I'll bring it home, I promise.
Like you said at the beginning, this is more complicated than...
It's really quite complicated.
This is a very rapid crash course. I think I'm following you mostly so far.
Yeah.
So.
Thank you. Okay, so we are now on the verge of what I feel, I'm not gonna make any predictions, but we're on the West Coast is the longest prolonged hard market in the history of insurance in modern times, okay? In insurance, there's something called a soft market and there's something called a hard market, okay? When the market is soft, it's a buyer's market. You're getting the best deals in insurance, okay? Insurance companies have either been profitable or they see an opportunity and they're going after your business, which means they're becoming extremely, extremely competitive on their rates. A lot of you have been the benefit of that for what I would think is a long time. I don't know how long that is going to be realistic in Central Oregon, to be honest, depending on where you live, okay? So I'll just use one carrier as an example. Scottsdale Insurance Company, if you own a business in Sisters, there's probably a decent chance that you might have a policy with Scottsdale Insurance. They're owned by Nationwide, but historically have kind of been considered the gold standard as far as what I do. They write non-standard insurance, and they write it for small businesses. And they are wonderful. I'm very, very thankful that I have an appointment with them and that I can write with them. They do very, very good work. But here's the deal, is that up until 2023 or end of 2023, they had not been profitable for 8 years. Okay, so that if somebody genuinely wants to engage with me and not just kind of vent about their insurance company, like this is typically the direction of the conversation that I'll go, is that this company that only writes hard to place business, which is on some level what we're all facing, for 8 years could not turn a profit. So what does it mean for a carrier to be profitable? Okay, a carrier determines its profitability based off of what is referred to as a combined ratio, okay? So combined ratio is made up of losses, which it should be, okay? We buy insurance for a reason. Every carrier should have losses. It's also combined with their operating expenses, okay? So operating expenses plus losses is combined ratio. Pretty simple concept, right? So for 8 years, Scottsdale had been running at a plus 100% combined ratio. There aren't too many businesses out there that could survive just not making any money for 8 years, right? And so that's what I mean when I say it's complicated. Can insurance companies be greedy? Are they solely focused on profits? Yes, they are. But they also have to make money. And when they don't make money, drastic things happen. And when I say drastic, I mean drastic. I wrote $1 million in premium with Scottsdale, and then they hit a red button, probably based off of their shareholders, investors, and we're like, we are profitable as of today, and I couldn't write anything with them for probably 6 months. And that was a huge deal, right? And so another quick example, State Farm pulled out of California almost entirely habitationally. Okay, they did that because they got downgraded by the financial ratings services to a B-. That is really shitty. You do not want to be a B- rated admitted company writing anywhere. I write hard to place insurance, and I had to get special permission from underwriting executives to write excess liability policies over State Farm. That's how bad it was. So they either pulled out or they like got decimated. Like they really didn't have a chance. So with all that being said, and I'm happy to answer a lot of people's questions, or anybody's questions, not a lot, hopefully one or two, but it's just severely complicated. Do I think that we are kind of facing this ultimate doom? No, I really don't. Because guess what? Like starting in 2024, after all of these austerity measures by the carriers, in California, the property market is actually really bullish in regards to what I do, okay, E&S. So 2024, rates started dropping double digits. 2025, rates were dropping even more. And the Palisades fire happened, which is now estimated to be a $40 billion insurance loss catastrophe. So, but the point that and from what I understand, carriers are still offering really, really good rates because the insurance is a very slow moving industry. Like everything is very closely assessed. So I'll end on this. Do I think that Sisters is like, from here on out, like in really, really challenging circumstances and for insurance, I think we're gonna be there for a bit. But when somebody recognizes an opportunity to make money here, there will be people here. And if we can make Sisters and Sisters Country as presentable as possible, I think that would even be a better scenario.
Really appreciate you ending on that note, because I think that's going to be one of the take-home messages that really came through in our prep, as well as how can we collectively work together to make this community as attractive as possible to insurers. So we'll circle back to that. Raise your hand if your head's spinning right now from all of this data and information. Anyone following? All right, we're just going to take a quick moment. We got a lot of nerds up here on the panel, and so we can really get into the weeds. And if you think it's complicated now, you should have heard our prep conversation. I think I was silent for like an hour and a half straight just listening to these folks. So, all right, let's try and get back into it here. Matt, I'm going to move to you for a second. We have heard a lot of talk in this community and in the state about the infamous wildfire hazard maps. Is that like a four-letter word now? So can you explain how they factor into what we're experiencing on the ground in terms of insurance? Are they a factor? Were they maybe going to be a factor, but now they're not? And if not, how is the insurance industry making these decisions around who and where to provide coverage, if not from those maps?
Sure. So real candid, the state wildfire hazard map is not a factor in the insurance decisioning process. The whole premise of what that hazard map was about was for the state to use resources to mitigate against fire. And that's what the whole plan was. My map right there. Got to be on it, sorry. Is to limit the risk of fire across the state. Insurance companies have a litany of tools that they use and had been using for decades prior to that map ever being released. So if you ever had an insurance policy written prior to the state hazard map being written, it got rated. It got rated from companies by LexisNexis, who do Clue, which is the comprehensive loss underwriting, whatever that E stands for. Yeah, I don't either. Exchange, that's what it is. And so what happens is if you have an insurance policy and you have a claim, it goes into a pool and every insurance company sees it and it gets reported out. So that's one tool that gets used. There's several that insurance companies use that they tap into. The map is not part of that at all. They now have started using aerial imagery very aggressively. When I was an agent, it drove me nuts because one of the companies that I was using got really heavy into aerial imagery and AI, and their damn tool would say, oh, there's a big tree hanging over that house. And it's like, no, that's a shadow. So it's not perfect. I get that. But the hazard map is not part of the discussion at all. And I know it feels like it. And there was a chart that was up here previously. I don't know if you ever saw it, but let's think about this. You go back 40 years, 80s, 90s, 2000s, 2010s, the amount of losses in the state of Oregon couple $100 million a year, but in insurance, that's nothing. That's nothing really. It's pennies. 2020s come along, and all of a sudden, with the Labor Day fires, so 2020 through 2024, we had $3 billion in insurance losses in Oregon alone. $3 billion. Prior to that, effectively nothing. Coincidentally, the wildfire hazard map comes out in 2020. Does anybody think the map caused the fires?
It was all those people burning them because they were so pissed when they got them in the mail, right?
It might have been. But I don't mean that to be flippant, but the reality is fires happen for all sorts of reasons, but they didn't happen because of the map.
Could I add one thing? Just
Absolutely.
I write with 15 different companies, like on a daily basis, and not one of them has ever referenced the wildfire map. They all have proprietary systems that they use. I have a comparative rater, which means I can plug some information and I can get quotes from like 15 different companies, okay? And it's kind of like, maybe it's your birthday. If you like, happy birthday. They all decline. There's one that'll offer a quote. All right, let's run with it, okay? And it's all based off their proprietary data. Now, some of them will use companies like CoreLogic or some of these others that's what I use personally, like when I'm quoting. But like some of these others will use other named, like they're big info aggregating companies and they use aerial technology and all this other stuff. But it's all proprietary stuff and it's all in their underwriting procedure.
So if we want to get mad at someone, we shouldn't get mad at the wildfire hazard maps. We should get mad at like OpenAI or Mark Zuckerberg or whoever's advancing all these AI technologies, right?
Could be. I mean,
okay. I'm just figuring out where to place our anger.
And there is some truth to that, because when you go through the quoting process, there is more and more stuff that's being done through AI that may in fact get kicked at first pass. And it does require some human intervention at times. Doesn't mean it's always going to get reversed, but it does require some intervention.
Sounds like the bottom line then is the insurance companies have plenty of data. They don't need the wildfire hazard maps to make their decisions.
They don't.
Yep.
But the other piece is that, I mean, both Tammy and Luke talked about this, is that insurance companies, they are private companies, they are for profit, and they all have a different risk appetite. And so I think you've all probably experienced this. You've gone out and you've shopped for insurance, maybe not in this current market when it's so incredibly difficult, but think back a few years ago when you had an opportunity to shop with various carriers, and you would go and you get a quote, and one carrier would give you a quote for $5,000 and somebody else gave you a quote for $2,000 and somebody else gave you no quote at all. It's an indication that their appetite is simply different. And they, as companies, get to make those decisions based on their current financial position and their overall risk that they have. Because of they are private entities, they're doing that to protect their bottom line. Do we all love it? No, I don't love it. I mean, I would much rather have a rate that doesn't go up 5 times my personal income level. But the reality is that's how these companies operate. They're for profit. They're trying to protect their shareholders. And if they think they're going to take on a piece of property that they're going to just be a massive loss on, they're going to say no.
So let's keep this going now. Matt, you are the government representative here on stage. I want to hear a bit more about what policymakers and agencies are doing to support Oregon communities that are impacted by insurance challenges like ours. Are there, bills being advanced, or what is ODFR doing, or what are other entities doing to try to support this if we recognize that, some insurers are pulling out and other rates are just skyrocketing?
So there's all sorts of things, and I'm not part of the policy team, and I'm certainly not the insurance commissioner, so I can't speak specifically on a lot of those issues. But one of the first things we do is we try and go out, like I said when I first spoke, is provide people with resources to make sure they understand that they have access to information, so they're planning better, so people don't get in a situation where they're so out of sync with what their needs are. And then we take information back, because partly what it comes down to is when we're hearing from communities what they need, we then bring that information back to other departments who then take that into rules making and legislative suggestions that then become part of potentially bills. What bills have been produced? Well, Senate Bill 82 was produced after some of the wildfires. And yes, it included a wildfire map, but it also included things like extended coverage for additional living expenses, which is a great thing. Protected people, if you had a loss, you got guaranteed up to 24 months, even longer with disaster declaration. So there's things that were put in place to protect people. Also with that bill was the ability to get 70% of your personal property payout without any inventory required at all. And for a lot of people, anybody have an inventory of your personal possessions? An actual detailed inventory?
I saw one hand. 2, 3, 4, 5.
Okay, so I'm gonna take the opportunity. If you don't have an inventory, do it. But that doesn't mean you have to go out and make a detailed list on an Excel spreadsheet and kill yourself. Use your smartphone. Take a video of your stuff slowly. Take pictures. Do something. Make it easy on yourself, because if you have a loss and you're forced to go back and think of everything you own, it's impossible. You're going to drive yourself insane. But if you have something to reference, pictures or videos, it's going to make it so much easier. And it's going to be something that you can submit to your adjuster and say, yeah, I did have a 75-inch TV.
I think that might be on their action guide. You need tips on it.
So lots of bills that are going through. Senate Bill 82 happened. That was in 2024. Senate Bill 83 is the one that's going to repeal potentially the wildfire hazard map and change several other factors about building codes. You want to talk about that?
If you can give it to me in 30 seconds, yeah.
It's going to push building codes to the local level, to the cities and counties, and they get to decide how they want to apply building codes, which should be home hardening and defensible space, in my opinion. But it is not going to have any really effect on insurance rates, because insurance companies don't use the hazard map. It's just going to make the hazard map go away.
That was a good 30 seconds. So, and a good segue, Stephen, I know you're interfacing a lot with local agencies and government representatives who are focused on this issue. What do you think is the role for them to play here? And I'm not trying to put you on the spot and speaking on top of any other, or on behalf of our elected officials or anything like that. But where are you seeing local entities that are maybe working to support consumers and businesses impacted by insurance challenges?
Our city, City of Sisters, has been working to approve defensible code, kind of modeled after Ashland, which is kind of like the leader in our state for writing great policies, having good firewise best practices. And so that's, if that's approved or when it's approved, that's going to be for new construction, residential and commercial. So that's a start. Now, I know the State Fire Marshal's Office has written code. And when we were going through that wildland fire hazard map ordeal for the last couple of years, they'd been writing code, and our agents that are local are like, we know if they codify it, we don't know how it's going to work. I don't know if they are planning on ever releasing code that might be retroactive. It certainly could, but that would involve, hopefully not me, going to everybody's homes and looking at their defensible space, making or telling. Right now, we give recommendations, telling them what they need to fix, or there's fines levied. And so the State Fire Marshal's Office is, we don't know what that may look like, how much it'd be, or where the money is going to go. So they just don't want to see that happen. So we have the opportunity now to be able to do that without being told to do it, but to do it for the right reasons, so our town doesn't burn down.
So just to clarify there, it sounds like you're saying, the effort is really on proactive measures to ensure that we, as a collective community and as individuals, have home hardening, defensible space, that we are a wildfire resilient community, because that's what's going to be the greatest likelihood of us getting to keep our insurance. Is that what I'm hearing? Yeah,
we have to be attractive to insurance companies. And if we're not going to see them wanting to take risk. You know what? It's great for a for-profit company to look at an area and say, that is a safe bet. We're going to make money there, and in return, the homeowners are going to be able to have insurance. So we need to get to that point. Kellen and I had a back hall conversation about You know, we have the opportunity to do that now, before fire comes through and wipes our town out, because we don't know what rebuilding is going to look like. We don't know what lag of time we're going to have insurance money to rebuild our homes. Or, you know, if you look at Beachy Creek, and I'm sure a lot of people drive to Salem, they look at what homes have been rebuilt. You see all the lots that are for sale, people that were uninsured. People are still living campers out there. There's a group of cabins that's on land, U.S. Forest Service land there, and none of those cabins have been rebuilt. I know this because that HOA for those cabins talks to the Camp Sherman HOA for the tracks. And so we don't want to face that. I don't think anybody here wants to face losing our town and losing our businesses. I think, and another thing Kellen and I talked about is, if you want to be blown away, just watch
Rebuilding Paradise.
Rebuilding Paradise.
On Hulu.
Everybody needs to watch that. And in the first 5 minutes, you'll understand the devastation that could happen to our town, all Greater Sisters country, because we are exactly what Paradise is. And they are struggling.
This is the 2018 Camp Fire that killed like 85 people, if you're not familiar.
So my point is the city's doing great things. You should be proud of what they're accomplishing. You should be proud of what the fire department's trying to accomplish and trying to help everybody get ready. And we just need to get to a point where everybody's house has defensible space, so one house doesn't catch on fire and the wind blows the fire against the next home and it starts going home to home ignitions. And if you watch the Rebuilding Paradise and one of their overheads, you see all these leveled homes and you see all the trees still standing. So that's exactly what could happen to our town. And we got to do better because we have the opportunity. I'm going to bring Jim into this, Jim Cornelius, because after the last meeting, he was over at the fire station and I said, Jim, how do you think that went? And he said, I think it's great. And he said, the problem is that you guys have been talking about defensible space for years and it's not getting through to people. And so that's where I'm at, because we do these wildland home assessments on people's homes in all these neighborhoods. And I've been doing this for a couple of years. I've gone back through those neighborhoods. And for some reason, I remember every home. I've walked around and talked to homeowners, and I drive through and nothing's done.
Quick poll.
Oh,
Raise
yeah,
your hand.
Pull time.
Raise your hand if you went to the last forum, the wildfire preparedness one.
Oh, that is great.
Raise your hand if you've done anything to take action since then. Okay,
Perfect.
wow. All right, way to be the leaders. Nice work. That was more than I
Okay, I'm talking to
anticipated.
people who didn't raise their hand.
Yeah. All right. So now that y'all are Kool-Aid drinkers, we need you to be our evangelists in the community, to going out to convince all your neighbors, right? That's actually a good segue into this last section I want to get into quickly before we go around for some audience Q&A. And that's really about that action-oriented piece. So Tammy, let's start with you. For those of us who still have insurance, what can we do explicitly to maximize the likelihood of staying covered? I think Stephen already alluded to that, but if you want to build on it, please.
Stephen always steals my thunder. I swear he does. The biggest thing is defensible space. So I can say, before it used to be, so the most important first footage it used to be 3 feet, okay, around your home. That is no longer. Now it is 5 feet. So that is the first 5 feet around your home. So no plants that can burn, no conifers. Stephen and I, get there. He steals my thunder. See, I told you. So basically hardscaping. So no mulch. I mean, I can honestly say I have a home in Clarepine. I've got bark mulch clear around my house. And that is the first thing I'm doing. I'm currently in the process of taking out all of my bark, and I'm going to put in gravel or some type of hardscaping like that.
Same.
And blue spruces. Oh my gosh. If you have a spruce tree that is near your house, please get rid of it. They are so flammable. I've kind of learned all of this between Stephen and seeing it online, and they're terrible. So you want that first 5 feet of defensible space. You know, I really try and tell people when they call me, you know, I either, you know, guide them to Stephen or I guide them to, you know, Craig and Jennifer. They own a company that, you know, works on assessments and can guide you on that. You know, the fire department has been great with it. They can come out and basically assess your home and tell you. So the other thing is also your venting screens, your foundation screens that are around your home. So those now, they weren't building code. I think they are now.
Go,
Oh.
Chris Meyer over here
Oh,
has
sure.
an excellent example that you can see explicitly what it looks like and what you need
There you
and
go.
where to buy it.
There you go.
Home
That's-
Depot, 1/8 inch.
Yep, that's what you need. You got to think about anything around your home. Decks are a huge one. So you have to think, can an ember get under this? Can an ember get through this? And if you've got a wood deck and you have it open underneath, there is so much stuff that is underneath that deck that is going to catch fire if an ember comes through. So I really tell people you've got to look at your defensible space, especially if you are buying a home. All the insurance companies are going to come out and they're going to inspect. They're going to do an exterior inspection. That is huge. So it's better to do it now. You know, the trees need to be limbed up. You cannot have any limbs that are overhanging any structure. So I say any structure because that means if you've got a detached garage, if you have a shop, anything like that, a lean-to, you know, whatever. No firewood up against your house. All of that.
These are also all a bunch of tips in your take-home guide as well. If you scan one of those QR codes, I forget which number it is, but we've got there's full detailed checklists and from the fire department as well that'll give you lots of advice on this.
That's perfect. So that's why I kind of try and tell people and teach them is the first thing. And keep in mind too, I have a lot of people that call me because they say, well, I'm buying a house and they currently have State Farm, so I'm okay, right? No. We underwrite the person and we underwrite the property. So just because State Farm or Farmers or Travelers is currently insuring that house, we are starting over from ground zero. Okay, so I want to make sure that that is relayed because I work with a lot of realtors too, and I try to do the best I can with them and guide them on what we can do. But I think the biggest takeaway is defensible space. That's your first thing. And the other thing I can say is you have to look at your driveway. So a lot of people that aren't within town, if you're on the outskirts, you have to think about how big is a fire engine? Can that fire engine get down your driveway? And if they cannot, you have got to do something because I'm going to tell you, if they can't get down that driveway, they are not coming to save your house if it's on fire. Okay? So that's the other thing I would look at.
Matt, let's go to you. Tammy talked about what those who still have insurance can do. For those who have lost insurance or, you know, get one of those Dear John letters in the mail, what can they do, if anything?
Well, there's several things. And first you want to do is take a breath because there are some options. Read that letter and then ask for details. You have absolutely every right as a insured in the state of Oregon to ask for explanations from your carrier. Ask for it in writing. What is the reason for my cancellation? You can even ask for a reason for a rate increase. They're required to give you a detailed property level explanation for a non-renewal or a cancellation. Here's the thing. There's a difference between a non-renewal and a cancellation. There's two primary reasons why properties get canceled, because you don't pay the premium or you've misrepresented the risk. And most cancellations occur within the first 60 days because someone gets policy issued and an inspection occurs and they go, oh, I didn't know you had a trampoline or you got a pit bull. And they don't like that risk and they cancel it. So non-renewals and cancellations kind of get mushed together and people say I got canceled. What's really happening in this market is you're getting non-renewed for the most part. I'm not saying it's a good thing. I'm just saying it's different. But if you get that notice, ask that question. If you can do something to mitigate the issue, you should try. You should try and fix it if you can. It sounds like the non-renewals that are going on now are based on carriers that are leaving the market, but it's a potential that they're doing something that you could mitigate the issue. And if you can, do it and keep the policy. Like Tammy was saying, if you can maintain your policy by doing something, by all means, do what you can. But if that's not going to work, you still need to know what the issue is when you go shopping with somebody else, because that issue is coming up again. If it's the branches over the roof, it's the pine needles in the valley, if it's the badge siding, if whatever it happens to be that is listed as an issue, it's going to come up again, and you're going to either have to deal with it or you're going to keep getting told no, no, no. So ask the question and find out. Lots of stuff here, so hang on. Because you've got because you got rights as consumers here, and so if you can, you want to keep your policies together. You want to get as many discounts as you can. And Tammy has said this as well. I mean, again, if you start moving stuff around and separating policies, you're getting the worst rate when you have a mono line somewhere. So keep them together as much as you possibly can. And look at your coverages. We talked about this as well. You want to make darn sure you have the right amount of coverage for your dwelling, for your house. And if $300 to $400 a square foot is the right amount here, then make sure you're covered at the right level. And she talked about detached garages. A lot of folks don't realize that the detached garage is not covered under the dwelling limit. It's covered under the other structures limit. So if you've got a snazzy detached garage, which has got 3 bays and a shop and a living structure in it, and it's worth $250,000, make darn sure your other structures limit is appropriate. Because if you lose it in a fire and you've only got $20,000, you're getting $20,000 less your deductible. So then there's no charity in insurance. So they're not going to come back and say, oh, sorry. So, and again, it's on us as insurers, as individuals, to make sure our coverage is correct. You're not going to be able to come back to the insurance company and say, yeah, but your calculation said this was the right replacement calculation. That was their estimate. We have the right to come back and say, no, I know my home. I did a remodel. It should be at this level. And you can have that level of engagement, and you should. You want to make sure you've got the right coverage for your house. So make sure they're right. But then look at your deductible. One of the best things you can do with a policy is ask for higher deductibles. Don't be at $500. I don't even think you can get a policy today at $500. Maybe don't even be at $1,000. Look at $2,500. Look at $5,000. You want to be at the highest deductible that you can stomach financially, because it should bring your premium down, and it should be challenging you not to submit claims, because you never want to submit a claim that is anywhere near, or by all means not below, your deductible, because all you're doing is getting a claim and $0 at that point. So, and getting a quote is free. Quoting doesn't cost anything but agents' time, and good agents are going to help service you and try and give you that information, but it's not that hard. And so you can see, what does it do if I go to a higher deductible? Am I saving a couple $100? Or am I saving $20? If each of us are different. We all have a different risk profile, so I can't tell you how to save your money and what to do, but I would say ask at higher deductibles. It should help you. If you're being told you're not available to be insured by a standard insurer, the big ones, the national ones, and you get denied by at least 2, you got 2 other options. It's the surplus lines non-admitted carriers, which are great options, but you got to be careful because they can exclude some perils like fire. So make sure you read your policy and know it's there. Doesn't mean you're guaranteed to have coverage through them, because they're still going to go through an underwriting process. But if you can get that policy, it's going to be a nice comprehensive policy for the most part. The final option in the state of Oregon is the Oregon Fair Plan. And
Similar to the California one we referenced before.
very much.
Policy of last resort.
Policy of last resort, it's an essential policy in its basic form, a DP1, if you know the nomenclature, which means it is pretty bare bones. In its initial form, you're getting $600,000 of dwelling coverage, no liability, and your personal property is included in that $600,000 at actual cash value. Like, oh my gosh, but it covers fire and a couple other perils, but That's about it. However, they've partnered with Access 180 and they do a wraparound, and you can add perils and you can add liability and you can add stuff, and you can, if you want to reach deeper and deeper into your pocket and pay more, you can get more coverage. You can also, through reinsurance, get potentially up to $5 million of coverage through the Oregon Fair Plan. But again, it's expensive. So if you happen to have $1.2 million home in the middle of a really high risk area and Oregon Fair Plan happens to be your only option, you can likely get a policy. And their underwriting requirements are pretty basic. It's got to be a standing structure. It's got to have a roof. Can't have a fire burning around it. I mean, sorry.
Seems reasonable. Yeah.
Seems reasonable. And you have to be able to put some skin in the game and do some defensible space. They're also going to do underwriting as you as an individual too. And so if you have a credit score of 2 and 85 claims on your history, that's going to be a problem. But the structure itself is not going to be scrutinized really aggressively. So they want you to be insured.
I'm going to let Luke and Stephen have a brief final word as Jim over here is getting his mobile microphone for anybody that has audience Q&A. So Luke, I'm going to put you on the spot for any final words of advice to people as individuals. And then Stephen, I'm going to put you on, give you the final word in terms of advice to the collective community. How about that? Yeah. Oh yeah. And you can continue to write your questions on a 3x5 card if you want to prep one that way. So Luke.
Yeah. Individually, I'm not sure. I think there's value, a lot of value from just a protectionist perspective to like get your property in as good a shape as possible, right? I mean, everybody should have insurance. That should be available for absolutely everybody. Even if the cost might be higher, you should be able to insure your home. But we're facing challenges in that area. I think the last thing I'd maybe like to just contribute as far as like another bird's eye kind of perspective is that it's not always your fault. Like when I read through our property what we forecast as a company, and we have really, really good data because we're a really, really big company, right? So it's always said like after the Palisades fire, so we had that in our rear view and now we're moving forward like, oh, carriers are still pretty aggressive. I think we might be able to have some options, but we haven't hit California's main wildfire season yet. It's always in there. It's in every single document. Oh, we haven't hit the Southeast cat windstorm season yet. So like what happens is carriers like have to try and anticipate. They don't like surprises, right? So the fact that California got a hurricane last year or the year before, I don't remember exactly, like that was terrifying to the insurance industry. The fact that the Northeast is having wildfires, that's terrifying because they don't anticipate some of those things. So we're facing new challenges where catastrophes are happening where they didn't used to happen. You can get insured in Tornado Alley because it's called Tornado Alley, and they know what's going to happen there, and they're going to put a fat 5-10% deductible on your roof or whatever, your house or whatever. I don't know. I don't live there. I don't write insurance there. But so what happens is is insurance. Did you guys know insurance companies get insurance? It's called reinsurance. Okay. A lot of this happens in London, Bermuda, some in the United States, but like there are hubs where this happens and they have meetings every single year. And a few years ago, they had a meeting and these executives got in this room. It's a bigger room than, this. It's a big deal. And Lloyd's of London and all these reinsurers like, we don't have capacity. And I wasn't there, but from what I understand, these executives are screaming at each other across the tables because the insurance carriers themselves, not the reinsurers, the carriers themselves have boards of directors and say, you can't write business if you don't get reinsurance at X. And so it kind of brings me back to, and this isn't helping anybody individually, but maybe it's just giving you a little bit of a better picture. It brings me back to what I said originally, like it's really, really complicated as far as what an insurance carrier is willing to do from underwriting guidelines, what they're able to do from a financial standpoint, and what they're restricted to do by their investors and their board of directors. So it's not necessarily our fault. I think the best way forward for us is to get our town in the best possible position so that when carrier, because cyclical, remember, hard, soft markets, it will get softer. I don't know if it'll ever get soft, but when a company does look at its sisters and say, we can make money here, like we want to be ready for that opportunity.
Well said. Thank you. Stephen, final word.
Luke stole
30
my
seconds.
thunder. So trying to get creative to figure out how we can keep insurance companies wanting to write policies here. I was looking at what happened in Palisades in 2023, trying to figure out how people were getting insurance that were rebuilding in Palisades, or excuse me, Paradise Fire. So what I found out is that IBHS, Institute of Business and Home Safety, which does all the fire science, they're the ones that help create defensible space. They do everything for insurance science. Basically, they're funded by insurance companies. They do hurricane strapping, stuff about flooding, but most of their work is done on wildfire and ember showers, those kinds of studies. So they created a company, an offset in their another division called Wildfire Prepared. And so I want everybody to have this in the back of your mind, wildfireprepared.org. That is something that's new to our state. Only California had this, and then Oregon adopted it in January. Recently, in the last couple of weeks, our Oregon State Fire Marshal's office went in partnership with Wildfire Prepared. And so some of that stuff's come out in the news. I think we had something in Nugget about it the other day. But that is a home, quote unquote, certification level, and it's a paid for service. But it's also, they're going to be doing 6 different neighborhoods across the nation. And right now they can only do it in California and Oregon because what that would involve is a Firewise neighborhood. Everybody in that neighborhood gets their home certified. They look at fuels around the outside. So let's say if you're in Sage Meadow, it would be what's the fuels load on Pine Street, or what's in the meadow itself. And then they look out a little further. And what they're trying to accomplish is, and I think Christine said it best. Christine's over at the table there with the screening over there. And if anybody has any questions about Firewise, Christine is like our resource. She's for Firewise lead for Tollgate, and they have a great website. But she called it Firewise on steroids, which we're hoping and we're hearing from the state that this is going to allow our state, our homeowners in our state, possibly different grant ideas. But what we're really trying to accomplish is that we need to make Sisters look like we are the champions for fuels mitigation. And so I want everybody to think about this. If you haven't had a home assessment, please reach out to the fire department. If you had one a couple of years ago, please reach out to the fire department because some stuff has changed. But I also tell people when we do these assessments, these are all recommendations. We don't want to be told at some point what we know we already need to do because we've been hearing about it for a long time. But also, if you're faced with the insurance company non-renewal, not canceled, non-renewal, they're going to look for the things that we are asking people or telling people it's a great recommendation. The insurance companies might send an underwriter out to your home. And if you haven't done what we've been telling people to do for a long time, they're not going to write you a policy as well. So you need to get prepared for that. If you have farmers insurance now, from what I'm hearing tonight, you need to get prepared for looking at a different insurance company. Maybe preemptively if they're really pulling out. State Farm, from my agent, and my agent's been great. I talk with them for hours at a time, trying to help navigate. I'm trying to get them to run this Wildfire Prepared up and see what State Farm thinks about it, since they are actually one of the funders of the IBHS. And he says, look, we have 22% risk in the state of Oregon, and that's what our company is comfortable having. So doesn't, if they get to that 22% threshold, that they're not going to write any more policies. And they're certainly not going to write them to an area that is ripe for wildfire. So we need to collectively need to make sure that our homes are ready for an ember shower, and we need to have everybody do that. And it doesn't help if you have, 20 people in your neighborhood and 4 people don't do it. If their homes catch on fire, your homes are a tremendous fuel load in a wildland fire scenario, and that's going to not bode well for your house. Because your house can only withstand so much heat and flame impingement or ember impingement. So if you have any questions, please reach out to us at the fire department. I'm going to try to keep people abreast of what's going on. You also can Google, or you can look at the State Fire Marshal's website to see how this wildfire prepared program and association with the Oregon State Fire Marshal's office is going to do for us. And we are grasping at straws. I am hearing that, if insurances may come back, I'm being waved off again.
Yep. I had to enlist a board member to do it this time. So
It's always getting in trouble.
I bring in the heavy.
So reach out to us and look that up and start doing your own research, and let's get our town prepared for ember showers.
All right, let's get to some of these questions. I got a few up here. If you have a question, you can raise your hand as well, and I'll try and toggle back and forth. Someone asked about exactly what you were just talking about with the new state safety certificate program. So the bottom line is stay tuned, but there might be some opportunities there, it sounds like. Let's go to a few of these other quick ones here. Yeah, if that one's on, go ahead.
I have 2 questions. One, could you talk a little bit more about the 1,000 feet, being within 1,000 feet of a fire hydrant, and how communities, say like Blackview, can mitigate that? And the other question is, how do you mitigate that lower deck, that lower wooden deck at your house that may be collecting embers underneath?
I'm going to punt the second one to the take-home guide that you have, because there's some great feedback in there, specifically about all the different home hardening measures that you can take, and there's really step-by-step checklists. And I think for the sake of time, that's one that we can just easily punt to the pamphlet. But for the home hydrant thing, Stephen, is that a question for you about 1,000 feet? Tammy. Okay, go ahead, Tammy.
On which one was it?
Talk more about being within 1,000 feet of a hydrant. Is that a requirement for every insurer for particular ones? Is that something that all the insurance companies are looking at?
Not necessarily. It's depends on the carrier. So right now we are obviously limited. So like Chubb. So Tollgate, I use that as an example, because Tollgate has been incredibly hard to get insurance in if you've lost your coverage and you're looking for new coverage. So before, I would say probably 6 months to a year ago, if you called me and said you lived in Tollgate, I basically told you to call somebody else because I did not have a market. So luckily, I've been able to work with my carriers, find out what's going on, who's writing, why are they writing it, what are the requirements.
Hey,
so when Black Butte is almost pretty much the same as Tollgate. So in Black Butte Ranch, the same. Chubb has been able to write in Black Butte Ranch. Now, it also depends on how the use of the home is. Is it a primary home? Is it a secondary home? Is it a vacation rental? That all factors into where I can go. So Black Butte, I believe, probably they're all fire hydrants, no standpipes. Okay, so if you called me and said you have a primary home in Black Butte Ranch, I'm going to probably guarantee that I can write it with Chubb.
Matt, is there something you wanted to add here too?
Yeah, the other factor is you've got a 24/7 staffed fire station on property, which is another factor for a lot of insurance companies.
So that is your protection class. So like Black Butte Ranch is a protection class 3. So that's good. So you wouldn't have any issues with that.
Great. I'm going to go to a written question here as well. Matt, let's start with this one maybe, but maybe Luke as well. Could additional regulations or Senate bills, or maybe even things at more the local or the regional level, make insurance companies less likely to want to write new policies?
Absolutely. And so that's one of the concerns that Oregon has with respect to regulating in the industry. Because if you overregulate private companies to make it unprofitable for them to do business, just let me finish the question. Okay.
We'll go. I see you, Jeff.
Yeah. They'll simply back out. And Luke referred to this with State Farm in California, where fundamentally it became sort of unprofitable for them to exist and write business in California. Oregon's taken the approach from a regulation standpoint to nudge insurers in directions to get them to partner with the agencies to do the right thing for Oregonians. But to stop short of saying, we're going to put hard requirements on them, because when the hard requirements come into play, each carrier's got a different amount of business, and you can't equate the amount of business State Farm has in Oregon to the amount of business that Sublimity had in Oregon. They are vastly different, and to regulate them the same way simply isn't fair. There is one other Senate bill that I didn't talk about, which is Senate Bill 85, and that goes to the issue of defensible space and home hardening and the certification process, but that's also in partnership with the insurance industry. So DCBS, the Department of Consumer and Business Services, above DFR, Oregon Department of Forestry, Oregon State Fire Marshal, and the insurance industry are all directed to work together, assuming Senate Bill 85 gets passed, to come up with a proposal to do all those elements, to encourage community-level collaboration, to do home hardening, and to get certifications at the property level embraced and recognized by the insurance industry. So I would say talk to your local representatives and encourage them to make sure that they back that. I think it's a good bill personally. I think it's a good bill for the state. We still need to find a way as a state to stop the spread of fire. Fire is going to happen. We just need to reduce the impact of it.
Yeah, and you have to be careful how much you regulate insurance companies, right? Because insurance is regulated by the state, right? And so the one thing an insurance company can always do is say, okay, we're not writing business here anymore. And so there have been instances where states try to force insurers to do something because it seems like it's the right thing to do. But if their bottom line doesn't match up with that regulation, they don't have to write in that state anymore. And keep in mind that while we're writing hard to place insurance out here, insurance companies are for the most part very risk averse. They don't want to be put in a position where they're doing things that their actuarial data is at odds with. So you just have to be careful when you're talking about the regulation of insurance companies. It's a slippery slope.
Jeff.
Hi. So my name is Jeff Tryans, and I've been educating myself on wildfire, and I love this. I love the last session you did, and the fire district did one. And one of the things that popped out at me is how dangerous wooden fences are, which never, ever crossed my mind, that you have a wooden fence against your house, you're screwed if there's a fire anywhere near you. And so now I drive home, I live in Crossroads, right? And every day I drive by the damn Grove and I see all these wooden fences right up against brand new houses. Why aren't corporations who do real estate development doing stuff like, hey, our development has fireproof wooden gates against your house? It just seems like Hayden and all these big developers could easily go, you know what, we're going to help you. We're not going to bump up right against your lovely building, your lovely brand new building with a wooden fence that can go up in a heartbeat. It drives me nuts now. I sort of imagine flames coming up out of the gates as I drive by.
Jeff, you're not wrong. A fence is a wick to your home unless you have a fire break. I think anybody from Clear Pine can attest to that. Was one of the things that the builder was supposed to put in was metal gates, and that didn't happen. Right. And so I'm not sure where they're at exactly in that. I think the builder's done in there and gone.
Yeah. I have a wooden fence attached to my house.
And her wooden fence is attached to her house, which goes directly across to her neighbor's house. So if you look at some of the video, what happened in Paradise, you'll see a lot of the homes were ignited by fence to home ignitions, and they just kept on going. You'll see a lot of video of people trying to escape, and you can see the fences on fire. And you can look at the IBHS video that shows what a wood fence will do and what a metal gate will do.
Yep. So
it was allowed.
yeah.
Well, so that's one of the issues that potentially was going to come to local communities, whether it be a city or a county, to take on those building codes to say, we're going to now require that break to be put in. It was potentially going to be a state building code, but now Senate Bill 83 is probably going to get the wildfire map repealed, probably. It's still in legislation, but it's going to be up to counties and cities to say, hey, we want to stop this. You're right. I mean, it makes sense to me. It's just like parking RVs and cars next to your house. That's a bomb. What if a fire comes up next to those things? They're going to burn like crazy.
So Jeff,
So-
it's not, it's something your homeowners association can change. Since you don't live in the City of Sisters, City of Sisters is kind of trying to take the first step in making sure that the residential homes that are built have a fire break as a part of defensible space.
I'm going to go to a few more questions here. I know we're a few minutes over time, but let's see if we can speed through just a few more. Sandy at the back, and then I see Chris was one as well.
I just had a comment on the fences and the gates that approach the house. After having you guys come out to the house, that was one of the comments that our gates, like everybody else's in Sisters, comes right to the house. So I contacted one of the few welders in the area that will build a gate that will go from the fence in the house, and he's coming out to do that replacement. They can do simple gates, solid panel. They can do artistic gates. They range anywhere from $1,500 to $3,000 per gate to be replacing the wooden gates that you might have already. It's not cheap, okay? But
Cheaper than a house, I guess, right?
It's much less expensive than replacing a house, yeah, to do that. But, and as far as the HOA is concerned, I'm not going to worry about my HOA at Saddlestone because I have a letter from the fire department that says I should replace the gate with a metal gate that doesn't. And that's what I'm going to use and send that to the HOA.
That's a recommendation.
I'm going to look at one of these written questions here, and then I'll go over to you, Chris. So here's a juicy one, and we don't have anyone up here representing the city, I know, and so this might not be appropriate here, but the juxtaposition between growth and fire risk, and is it responsible to grow or tolerate growth, expansion, sprawl, what have you, in an area that is so with such high fire risk? Or is that the wrong question to be asking, maybe? I added that little part myself. They didn't write that. I'm just asking, like, and we can punt this one if none of you feel comfortable answering this one here. I know
I'll take a stab at it.
Okay.
I think we're with our urban growth boundary needing to grow. We
legally required to grow. Is that what you're
legally
saying?
required to grow.
Thanks so
We've
much.
been looking at, I had a great conversation with Matt when we were driving around looking at fire dangers, Matt Martin from the city. And I said, this is a problem. I have no way to help you out, Matt, but if you're looking at our urban growth boundary and we're trying to do affordable housing, you got to pack homes tighter to each other. And that's exactly kind of what we don't want with the fire district. We want some space between homes so we don't have these home-to-home ignitions, or at least we have a little bit of space to work with. And so I don't have the solution to that other than we kind of like to have at least 20 feet between homes. But it also might not bode well for trying to create affordable homes in certain parts of the urban growth boundary.
Sometimes there are points of tension between different, very valid goals for a community, is what I'm hearing you say. That sometimes affordable housing might run up against fire risk, or sometimes, well, yeah, we'll just leave it at that, and that we're going to have to get creative with solutions if we're going to try to have it all here, right? And while also trying to deal with legally mandated requirements for cities in the state of Oregon, such as urban growth boundaries. All right, let's go to the final question with Chris in the back.
Tollgate is considering or has started talking again about a complete ban on open or debris burning in our community. It's certainly not something that we're requiring or anything like that, but we're talking about it. If we were able to get our residents to agree to a complete burn ban, would that improve our ability to be insured?
Actually, there was another question here, which was, when will insurance companies offer discounts for home hardening projects? So they're kind of in the same vein, right?
I'm going to answer those in reverse.
Okay.
I don't know when discounts are going to be applied for home hardening because it becomes sort of this over regulation to say you're forced to discounts. I know there's a few that actually do offer discounts. USAA is one at the moment, and they're all required to put on their websites what their underwriting codes are with respect to how they consider wildfire mitigation.
This is the Firewise
Yeah.
community.
Yeah. So honestly, there's not very many of the 105 carriers in the state of Oregon that are actually offering discounts. So when it's going to happen, don't know. Luke sort of said this, it's a slow moving machine. These processes of getting home hardening and certification where the industry actually recognizes it, I think is a really good step. And that's Senate Bill 85 that's coming. And everything that you do as a community to protect your communities and your homes individually and encouraging everybody else who's not, because it's those one or two or three that are not, that put you all at risk, that put the community at risk. So does banning fire in your community help you? Well, if it's going to help you be Firewise community certified and certified at an IBS HS, which is a higher level of standard, then I would say it can't hurt you. But is it going to check off a box with an insurance company? At this point, I can't say it will. But it's in the right direction of protecting your home, your neighbor, and your communities.
So I won't say that this is my favorite conversation that we've ever had at a community forum, but I think it might be one of the most necessary that we have to have. And I think that goes for the wildfire one too. These are hard topics to cover. They are dense, they are complicated, there's no clear-cut answers, but I'm just want to acknowledge all of you again for being in the room for this, because you are now the evangelists within your neighborhoods, within our community, for emphasizing that there is a collective action problem here that we need to be working on. We need to all be working together to make our community more attractive to insurers. The silver lining of that is that making our community more attractive to insurers is also going to be reducing our collective fire risk and reducing the risk that our community burns down and turns into the next paradise. And so I think there's a bit of a killing two birds with one stone mentality that we need to take on here. You know, we all probably moved here, or many of us moved here intentionally because we wanted to be in this community. And if we wanted to stick around, that means we're all going to have to be part of the solution. And thankfully, that'll help, hopefully, fingers crossed, address our insurance challenges as well. I'm really grateful to our panelists today and all of our partners who made these conversations possible. Let's give them a round of applause to the panelists. Luke had to duck out early to go back to parenting. I want to finish with just a few recommended things. I mentioned your take-home action guide. I'd also encourage you to join us for our book club discussion of the book Fire in Paradise. That'll be on May 28th at Paulina Springs Books in the evening. It's also on your take-home packet. I've been reading this book, and it is sobering, to say the least, and it really underscores the importance of us taking proactive action here so that we do not experience what happened to that community in California in 2018. I'd welcome your participation in that conversation. If you want to learn more about upcoming forums that we have, please subscribe to our newsletter. Please also engage with our tabling organizations around the room who have some excellent resources. You do not have to go about all of this home hardening and defensible space alone. There are other people in this community and entities that can help you get as prepared as possible. And with that, thank you, be well, and let's all be part of the solution. All right, everybody, have a great evening. Take care.